Good afternoon. It is Tuesday, November 14th. It's 10 after 2, people. So much to talk about today, people. I don't even know where to begin. There's just so much going on right now. A lot of things I'd like to talk about. First thing, they say a picture is worth 1,000 words, right? 3 o'clock in the morning last night, I'm watching the gold market. It's at that 1276 level. And then boom, in the blink of an eye on no news, down almost $7. Look at that. Is that normal price action? They did it again. They did it on Friday. This is what they've been doing. All right. So then right about 9 o'clock, after gold tries to make a move back up and rebound from that drop, they hit it down again. Still down $6.70. That was basically 6 hours later, right? Then, about an hour later, boom. You don't see this very often. It's like the Aurora Borealis, okay? It actually shot up there. There's the whole picture. There's so much shenanigans going on right now with gold. It's so obvious. It's so in your face, the manipulation, okay? But there's certainly something cooking here, all right? And I always, people, I always go back to the Big Short. I always go back to the Big Short because it's so true, okay? A lot of this is fueled not only by just corruption and fraudulent behavior, okay, but stupidity. And if the Fed and these banksters, okay, think that they can keep this all together, they're stupid. Because in the end, they will lose, okay? They're going to lose, all right? In The Big Short, and you know how I love to quote that movie, because you glean so much out of it, okay? Baum, right? He says the banks have given us 25% interest rates on credit cards. They have screwed us on student loans that we can never get out from under. Then this guy walks into my office and says those same banks got greedy. They lost track of the market, and I can profit off their stupidity. Screw, yeah, I want him to be right. And he didn't use the word screw, yeah. And that's what they did. They got greedy. They are greedy now, and they're losing track of this market. If they lost control of the market back then, they can lose control of this market again. And I believe that's what's happening. And you're starting to see the cracks, okay? And you can profit off their stupidity. So these shenanigans they want to play in the COMEX paper market, yeah, it's manipulation. Yeah, it's sinister. It's also stupid, okay? Because they're not going to win in the end, okay? And then he goes on to say, we live in an era of fraud in America. We live in an era of fraud in America. Not just in banking, but in government, education, religion, food, even baseball, right? What bothers me isn't that fraud is not nice or that fraud is mean. For 15,000 years, fraud and short-sighted thinking have never, ever worked. It's not going to work, people. Not once. They're going to lose this game that they're playing. I don't know when, but they're going to lose. And there's so much going on right now. I think it's starting to get some cracks here. Eventually you get caught. Things go south. When the hell did we forget all that? I thought we were better than this. I really did. Talk about going south. The dollar is getting crushed today. Okay? Dollar is down big time, down 71 cents, 93.80. It's got a 93 handle. I said a few videos back, it looks like the dollar might be topping here. We got to watch this. That counter trend rally might be ending, right? And it's getting crushed today, all right? So this might be the start of the resumption of the bear market, the downtrend that we've seen in the dollar all day long. We got to watch this, people, okay? Because this thing is getting hit today, all right? Oil is down big time, $55. It was over 57. It's down $1, $1.22 today. It's got a 55 handle, okay? The Dow Jones, the plunge protection team, once again, they're corrupt, but they're stupid because they're going to lose. They levitated the market yesterday. The Dow was down about 80, 85 points. It came back, right? Today it was down about 160 points. The last time I looked, down 50 points. Who is stepping into this market? Who's buying this? The plunge protection team, okay? Right? You see what's happening here. Charlie Geller, all right? Big Short. Either the banks are clueless, which they are, and they don't know how to value these CDOs, or they're such crooks, which they are, that the CDOs are worth shit and they're hiding it. And that's what's happening here, people. Okay? The earnings are horrible. The economy sucks. They're such crooks. Yeah, they can print money all day long. Okay? The plunge protection team can come in and support these equity markets. Okay? The Crimex could just, manipulate the paper, gold, all they want. Okay? But they're clueless. Okay? They're such crooks that they're going to lose. They're going to lose. They lost control of the market back then. They're going to lose control of the market again. All right? Vinny Daniel, mortgage defaults have done nothing but go up, yet you quote us a higher price on the bonds. It's all fraud. It's all manipulation. Please explain that to me, he says. I want somebody to explain. I want somebody to explain this, okay? I want somebody to explain this, okay? I said the other day, I was putting out a clarion call. We need to start to really, circle the wagons and put an end to this nonsense. They've gone up, yet you quote us a price on the bonds. Please explain that to me. There's no way that makes sense. There's no way you're marking these swaps appropriately, right? Then Jared Vinette, he reminds them, right, that the banks are clueless, right? Now their foot's on fire, and they think their steak is done. And you're surprised? Their foot is on fire. They don't even know their steak is done, right? It took the fire going to their feet, and now they smell it, all right? That's the only way. It's starting to show, people. The Fed is boxed in, all right? They've already priced in a December rate hike, and look what's happening to the dollar, okay? All this news that was supposed to be so terrible for gold, right? Even these paper manipulation that's in your face, and yet gold is still at this 1280 level. It's up about $5 today, okay? The bears are starting to lose. That's what's going on here, all right? And then Mark Baum says, that's not stupidity, that's fraud. Tell me the difference between stupid and illegal, and I'll have my wife's brother arrested. So there's fraud here, and there is stupidity here. The stupidity that they think they're going to win this. They're not. The market will ultimately assert itself. Okay, you can't have Janet Yellen, okay, and the rest of her comrades, okay, in some little room with their junior year textbooks, and they think they can calibrate all this and figure it all out, and all their dot plots and models. It ain't going to work, okay, and they're going to be proven that they're wrong again, okay. They created the biggest, fattest, ugliest bubble in the history of the world, okay, and now it's going to come crashing down. Up until now, I'm a bull in stocks. I've said that. I said this time it's different. All those people that have been telling you it's going to collapse, I said no, right? But right now, okay, I'm going the other way, all right? Take money off the table, people. That's what I would do. I can't recommend what you do. Take money off the table, okay? I'm starting to see a little chinks in the armor here, all right? It went down yesterday hard, came back up, went down big time today. They're bringing it up. The VIX is starting to get back up. It's over 12, I think, now. So there's some volatility coming back into these markets. All right? So much to talk about here, people. 5, I saw this article today. 5 big brands that might be no more. Okay? This is the real economy. This is not Wall Street. Okay? This is not CNBC. Okay? This is the real economy. The power of a brand that is instantly gives consumers the impression of quality and consistency. A great brand is an assurance that a product or service is worth the asking price or more, right? When a brand goes bad, it can be caught in a negative feedback loop. A negative feedback loop. It kind of reinforces itself. And before I forget, that reminds me of something else I want to talk about. This Ray Dalio, right? This Ray Dalio, the big hedge fund manager, right? Saw an article here today. Ray Dalio. Let me see if I can find it. Boom. My iPad's getting slower and slower. Ray Dalio buys $500 million in gold ETFs in third quarter. This guy's a fish. This guy's a whale. He's a big player. Okay? He's not a punter, this guy. Ray Dalio. $500 million in gold ETFs in the third quarter. All right? This guy's a whale. He knows what he's doing. Ray Dalio, founder of Bridgewater Associates, put his money where his mouth is as his firm significantly increased its gold holding in the third quarter. According to the Securities and Exchange filings, the investment firm held almost 4 million shares of the SPDR Gold Trust, the GLD, the EFT, 4 million shares, the world's biggest gold-backed exchange-traded product in the third quarter. The position is valued at $470 million. The firm increased its GLD holdings from 577,000 shares bought in the second quarter. At the same time, the firm increased its holdings of iShares Gold Trust, the IAU, on the New York Stock Exchange, to more than 11 million shares, valued at nearly $139 million. Okay? So this guy, he sees the handwriting on the wall. All right? Well, first of all, the best way to structure a portfolio is to have the right kind of balance in your portfolio and some amount of gold. Gold serves a purpose. It is, first of all, a diversifier against other assets, he said in September in an interview with Business Insider. Okay? Dalio, one of the most high-profile investors, wasn't alone in buying gold in the third quarter. GLD saw its gold holding increase by 18 tons. Okay? So this guy's a whale. And he's buying it, and it's making headlines, and he's increasing his exposure to gold. And this could be like a self-fulfilling prophecy also. He buys it, other people get on board, and this is what it is. And just like selling begets selling, buying begets buying, okay? So this is like a self-fulfilling prophecy here, all right? And getting back to these brands, this is like the same thing, only the inverse. This negative feedback loop, right? And this is the real economy, people, okay? The 5 household names below are in this predicament, and it may only be a matter of time before they disappear. Kmart, right? While the whole structure of Sears Holdings looks like it's teetering on the edge of bankruptcy, Kmart may be the vision of the company that succumbs first. The lamb that's sacrificed in an effort to save the Sears brand. Sears is done. Kmart is done, right? The Limited. The Limited was once a popular working women's clothing brand owned by Limited Brands, which also owns Victoria's Secrets and Bed Bath & Beyond. But the parent company must have seen the writing on the wall when it sold the Limited to private equity firm Sun Capital Partners. The Limited ended up closing every single one of its 250 brick-and-mortar stores and firing 4,000 employees with the intent to move all its inventory online. They all right, you want to move the inventory online, but this is people. These jobs are going away, okay? Kmart, the Limited, done. This is the real economy, people. JCPenney, this once venerable department store chain, JCPenney, circling the drain right along with Sears. The retailer had briefly shown some signs of a comeback, but it recently released third quarter earnings, fueled speculation that all the changes it made may have been for naught. JCPenney, toast. Mattel, Toy maker Mattel. These were once recognized big brand names. And look what's happening. So I don't care how much QE and how they want to keep these interest rates down and create these bubbles on Wall Street. They're going to lose. It's fueled by stupidity if they think they can win. Toy maker Mattel reeling from the poor retail environment that caused Toys R Us to go bankrupt, as well as Hollywood's bust of summer blockbuster season. So bad was the third quarter earnings report that it ended up suspending its dividend. A step few companies take unless they're in truly dire straits. Finally, Bed Bath & Beyond. It was expected that when Linens and Things went bankrupt, Bed Bath & Beyond would pick up the ball and keep running downfield. Instead, Amazon suddenly became a viable competitor to home goods retailers, even as mass merchandisers like Walmart, Costco, and Target expanded their selections. Bed Bath & Beyond also made a major mistake in almost completely ignoring the online space. It wasn't until late in the game that it made a concerted effort to build up its e-commerce presence, and even then it got distracted, creating flash sale site on Kings Lane and branching out into more categories that are far afield from its core competency. It's another brand. Forget about it. This is what's happening, people, in the real world, okay? Not what you see on CNBC. So we see what's happening. The dollar is getting crushed. The bears are not winning against gold. Every time they have these huge volume takedowns in the Crimex, gold rebounds, okay? The VIX is starting to make some noise. They're trying to hold the bond market together. The plunge protection team has to come in to save the stocks every day. Name brands like this going out of business, layoffs, people out of work, okay? And all this is, and the dollar being crushed with it already priced in, this rate hike, it's not good, people. Not good. I don't know if I have it, but I'll save it for another day. But I was looking at this. Oh, talk about stupidity. Before I forget, talk about stupidity. Now, let's take another look at this. You say, what's the explanation for this? What's the explanation? Is there any explanation besides this just being manipulated? But as it was going down again, it came back and came back down again, right? You see headlines like this. Stupidity. Gold remains under pressure. I got to refresh my screen. This iPad is getting slower and slower. Gold remains under pressure following 0.4 rise in U.S. PPI. Does this make any sense, people? Everything is upside down here, people. Gold is under pressure at the time of this writing and the price that it was, earlier in the day, following a 0.4% rise in U.S. PPI. That's the producer price index. That's inflation. It's heating up, okay? And the stupidity, okay, gold's going to go down? We live in a perverse world here, people. Gold prices under pressure from a stronger U.S. dollar. Yeah, so much for that. Look what happened to the dollar. Saw a little reaction as producer inflation pressures picked up in the U.S. October. Okay? Today, the Labor Department said its producer price index, the PPI, rose 0.4% last month, following an increase of 0.4% in September. This is inflation. Throughout history, right? Gold has been the best hedge against inflation. But in this perverse world that we live in, which is just corruption and stupidity, they're going to sell gold. Why? What's their perverse logic? Well, if inflation is heating up, well, we'll just fight inflation. The Fed does not fight inflation. The Fed creates inflation. They don't fight inflation. They fuel inflation. So they're thinking, oh, well, the Fed will fight it. We'll raise interest rates. The dollar will get stronger and gold will go down. No, they're already behind the curve. It's already too late, okay? It's all stupidity, people. Gold was already down ahead of the report, and I see little movement in initial reaction. It's just all nonsense. Then I see another similar article, the same thing. Gold prices weaken on higher inflation data. Does that make any sense to you? Does that make any sense to you? Gold prices weaker on higher inflation data. You know, it brings up another quote. I love these quotes. Okay? All the shenanigans, these crooks, these banksters, right? They're deliberately not marking the swaps, the bonds correctly, right? And what did Charlie Geller do? He's befuddled. His partner, Jamie, is befuddled. Charlie Geller, either the banks are clueless. The people that would sell gold because inflation is higher, they're clueless. Either the banks are clueless and they don't know how to value these CDOs, or they're such crooks that the CDOs are worth shit and they're hiding it, okay? It's clueless. It's fueled out of stupidity, okay? That's what it is. So this video is getting rather long. There was something else I wanted to share, but I want to do it justice. So basically, I'll say it in a nutshell. I see what's going on. Talk about these recessions, the recession. Is there any sign of a recession? I went back and I looked at all the recessions that we had, right? And the time frame between recessions, right? You had the period before the Great Depression, after the Great Depression, okay? And I was doing some research, all right? And if I can find it real fast, bear with me, because this is important. And you look, and you see the average time frame between recessions. You have early recessions and crises. You have the panic of 1785, right? Lasted 4 years, right? The copper panic of 1789, right? Lasted 4 years. The panic of 1796 to 97, right? Lasted 3 years. The 1802 to 1804 recession lasted 2 years. Now it starts to get into the time since the previous recession. So you have 4 years, 3 years, 3 years, 18 months, 1812 recession, 18 months. The time had that elapsed from the prior recession, 18 months. 1815 to 21 depression, right? It had been 3 years, right? The 1812 recession, 3 years later we had the 1815. So it took 3 years. The 1822 to 1823 recession took a year for another recession. 1825 to 1820, it was almost every other year. It's like a recession, 2 years. The 1828 to 1829, 2 years. The 1833 to 1834 recession, 4 years, right? That was known as the early recessions and crisis, right? They came around every 2-3 years, right? Then you have the free banking era to the Great Depression, right? And you had the 1836 recession, right? Time since previous recession, 2 years. The late 1839 recession, 1 year. 1845, 2 years. 1847, 1 year. 1853, 5 years. That was long. That took a long time. 5 years. It's like the longest one, I think, so far. The panic of 1857, 2 years and 6 months. The 1860 recession, 1 year, 10 months. So they're coming along so frequently. All these recessions, right? The 1865, 3 years, 10 months. The 1869, 1 year, 6 months. The panic of 1873 and the long depression, 2 years, 10 months. The 1882 recession, 3 years. The 1887, 1 year, 10 months. The 1890, 1 year, 5 months. The panic of 1893, 1 year, 8 months. The panic of 1890, a lot of panicking going on, right? You know, you get you get a new generation of investors. They don't know the past. They haven't learned from the past. So they repeat the same stupidity, okay, that we're seeing today. Sell gold, higher inflation, okay? 1902 recession, 1 year, 9 months. The panic of 07, 2 years. 1 year, 1 year. 3 years, 8 months. 10 months, 2 years. 2 years, 3 months. Then we get the Great Depression onward. So supposedly now things maybe are a little better, right? Time since previous recession. 1 year, 9 months. 4 years, 2 months. 6 years, 8 months. That was pretty long. 3 years, 1 month. 3 years, 9 months. 3 years, 3 months. 2 years. 8 years. That took a long time. The recession of 1969. It had been 8 years since the recession of 1960. 1973 recession, 3 years. 4 years, 10 months. 1 year. 7 years, 8 months. 10 years. The early 2000 recession, 10 years. The Great Recession, so far it's been 6 years and 1 month. Okay? So, we're getting long in the tooth, people. All right? So, I think it's coming. If it's not already. I think we never really fully recovered. So, it's just this period of slow and no growth. And distorted markets that they're so clueless. They don't know the value of anything and they're just pricing everything wrong, right? Fraudulent, gold, equities. So, but these recessions, we're getting very long in the tooth. So, we got to watch the gold market. It's looking okay. All right, the bears can't take it down. Watch the dollar, very important. This might be the resumption of the downtrend. Okay, and if it is, it's got a long way to go. So, be nimble, people. Okay, be nimble. Lord willing, tomorrow's another day. And get out for a walk if you can. Beautiful day outside. Take a walk, get some fresh air, stretch your legs. Ciao.